Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Tuesday afternoon, Taco Tuesday. Hope you all had a good session out there. Yes, the title, as some of you seem shocked there, Rita, the calm before the storm. And I put the calm before the storm because the market really wasn't that exciting today. Certainly had a decent range, but there wasn't a lot of fireworks going on. And ultimately, I think it's just kind of setting up for what happens tomorrow. I expect there to be a rather low volume day for the first half. And then as we get near the close, I tend to expect a lot of anticipation for what's going to happen with Nvidia. And of course, it's Nvidia's big day tomorrow. And normally when we go through an earnings week, there's always bookends of earnings. There's earnings all over the place. So you got some big names here and there. This week, it's really just one. It's just one big name, and that is, of course, Nvidia. So let's take a peek at our markets. I'm probably going to do things backwards today, start with our top 10 and work our way down from there. I'll go through these charts, of course, talk about the impact of the anticipation of Nvidia, and you can see volume really wasn't anything special today. Seems a little bit lower than the historical trends, but nothing too exciting there on the future side of things. So let's start at the bottom. We go to crude oil. Starting off with crude oil, it's interesting how some of these levels just kind of play into market psychology over and over again. You might remember this top area it was demand at some point between $64.60 and $65.46. That held for quite some time. It bounced for a few months on that one. And then once it broke, my expectation was we were going to drop all the way back down to this, call it $60.94 mark, which we didn't quite get there. It was not quite there yet. But what is interesting is as price started to rally up, what was support becomes demand, exactly as Margaret pointed out there in the chat. And that's exactly what happened here. We rallied up into it, and I wasn't watching this chart yesterday from a supply perspective, but this would have been a really good one to keep an eye on today just because of technical analysis, right? These overhead numbers, and who knows why they work this way. The belief is that, once it broke through there, a bunch of sell orders were put in at that zone, and as it comes back up, those sell orders are still there and causes to push price down. Who knows how true those things are, but we do see it quite often that once it moves through a certain level, it can be pretty problematic for a security, but then as it comes back to that level, hey, it may act as a supply or demand zone. So crude oil down 2.27%, nothing really technical there other than looking at the trend since June. It's been lower lows and lower highs, and we'll see if that continues on here as we go maybe challenge those lows back around $60.94 again. The 10-year yield, nothing really major, was only down 0.28% on the session, but at one point we actually had an increase in the yield, and then it gave all that up, and the trend still looks like a descending triangle, in my opinion, going all the way back into early May. Lower lows, same lows and lower highs. That looks like pressure pushing price down. And let me draw a line across the current ones. I guess I should stop the presses. Hold on. Stop the presses. Taylor Swift and Travis Kelce got engaged. I know. Market should have closed today, right? We should have just shut down the markets and had a fantastic day of celebration as Travis Kelce and Taylor Swift are getting married. Yay! Do we really care? Good for them. Good for them. I'm happy for them. I hope that they make a bunch of albums and sing some songs together. But they seem like a great couple, so awesome for them. You were crying all day, Margaret? Please. Were you really? Are you? Margaret, I never would have pegged you as a Swiftie, but I have some Taylor Swift friends who are just losing their minds over it. They're like so excited. Cool. Good for them. I don't know if they would go to the White House, Glenn. It'd be an interesting one. Yeah. Look, I don't care. I don't care about all the publicity. It's so annoying in my opinion. However, look, I'm happy that these two found each other. I have nothing but respect for Taylor Swift. She is a great musician. She's done amazing what she's done. I actually like Travis Kelce, even though he doesn't play for the San Francisco 49ers. But, I don't think anybody here wishes them to any ill will on them. So congrats to them, and we'll move on. Back to our charts. The prenup will be interesting. Yeah, right? It's almost like a Tom Brady and Giselle thing, right? Funny because Tom Brady, one of the GOATs ever to play the game, making tons and tons of money. He wasn't the breadwinner in his relationship. Giselle was his breadwinner. That's just crazy. I'm sure there will be a prenup there for that for sure. Travis Kelce played for the Kansas City Chiefs. Yeah, I think she's worth over $1 billion, Steven. And she'll probably continue to make a lot more. She's very talented. She's got the whole pop country culture down, so she knows how to just crank out hits after hit after hit. And a lot of them, they feel very cliche love songs, romance songs, but people gobble that up and people just absolutely just devour that type of music. So good for them. It's awesome. I'm happy for them. Good for them. All right, back to the charts. Let's get off the celebrity statuses. So back to our charts. I'm going to go to the dollar index, which is pretty much the same thing as the 10-year bond today, down 0.22%. But really the story hasn't changed. It doesn't look that great. Dollar index looks like it's getting weaker, at least over the past month. Which has been interesting because we've had this series of higher lows coming in, but now all of a sudden it's bouncing right off that lower, I think it's a green line on your screen. If that breaks, we're probably going to challenge that next level at 97.16. And if that happens, that means that trend to the upside would be broken. And that would imply, to me at least, that we'd see more downside movement in the dollar index, which means more upside movement in the equity markets, which means more all-time highs for the equity markets. Yay, let's bring it on. All right, let's move to other things. A nice little about face here. Bitcoin was looking pretty ugly last night. I was like, are we going to go all the way down? If I drag out this little demand zone I drew out the other day, you notice that the high end of that demand zone is 109,215, and today the low price was 108,845 for Bitcoin before it caught a bid and started to rally out. We're currently at 111,425 on the futures. That was a gain of 0.46% on the day. Still in an ugly looking chart because that trend and that slide over the past 2 weeks has been so aggressive, but nice to see it catch a bid and possibly push us back to the upside here. So we'll keep our eyes on this one as well to see if Bitcoin does catch a bid and start to move back up, which would be very beneficial for me, not just because of my Bitcoin holdings, but because I have MicroStrategy as well. All right, we're getting into our broad market indexes here. Here's the NASDAQ 100. Nothing really that interesting. I did receive a message from someone earlier telling me, what about the hammer on NASDAQ? I would not call that a hammer or a hanging man. So remember, a hammer needs to be at the bottom of a downtrend. And that's not, by the way, for those who might be new, what we're talking about is the last candle you see on your chart. This one right here. By itself, it could be either a hammer or a hanging man. Location is what helps determine what that is. And because it's after like a 2-day rally up, that would be considered a hanging man, but it's not really. I mean, it's a 2-day rally. I don't care. I don't put much emphasis on that or emotion on that one as well. So to the gentleman who sent that question, no, that's not a hammer formation. A hammer formation would be down near the bottom. A hanging man would be up near the top. But bottom line, it's still, as Rob says, still bullish from demand zone. I mean, this is definitely a bullish candle. I definitely like the bullish candle, and I think that it might have some upside movement tomorrow. I think the broad market indexes are going to have a good day tomorrow. So there we go. And now it's podium time. We make our way to the S&P 500, which is just smacking its head against that 6,490.5 mark, which we drew a line across. Today, we didn't quite get all the way up there, but it's the exact same candle we just saw on the NASDAQ, which is we had a red candle for most of the day, and then all of a sudden it came ripping right back up when we had it closed near the dead high. Really dead high for the session, which is great. It was a 0.49% increase in the S&P 500 today, closing at 6,487, but still not breaking through any all-time closing highs or all-time highs, but I think that might change tomorrow. We shall see. So that was your bronze medal winner for the day. Lisa says S&P and NQ both inside Friday's candle. Yeah, but you're skipping a day. You're skipping a day. You know, it would really more important if it's inside of yesterday's candle, which would be Monday's. Gold. So gold up 0.75%, so 0.75% for gold to 3,443. When I zoom out here, though, you'll notice it's still stuck between those two bands, right? It's just been bouncing back and forth between 3,270 and 3,500, maybe even a little bit less than that. And here we are at 3,443. So it's looking good, but still in the middle of the zone, so nothing actionable yet. I would argue you were probably going to want to do spread trades on this or wait until we get up through that overhead supply zone before jumping on. And lastly, the Russell, which was one of our monster movers over the past 3 weeks, 0.85% gain, 2364 is where it closed. And, we've got just a squiggly little action going on over the last 2 days. Nothing really that noteworthy here, although it does look like from a flag perspective. I know we got people here who love bullish flags. You could argue that this might be a bullish flag forming here because the impulse move on Friday, we sold off a little bit, we moved back up, and then maybe the next leg comes after that. So there we go from broad market perspective. Now going back to our Magnificent Seven, which is the topic du jour. Nvidia was not your best performer today, but it has had 3 significant ups days in a row. We were down around in the 171 mark, and here we are now at 182. in the after-hour session today. So it's been a nice little rally here for Nvidia. My shares will get taken away at 177.50, so I'm not worried about that at all. Right now, we are creeping towards that all-time high level. It's not the all-time high or closing high, but I do think if Nvidia does post, as I expect them to do, make positive comments about growth, positive comments about China and money coming in, I think you'll probably see the S&P go through all-time highs tomorrow. But I'm not adding anything new to my positions. You guys already know the positions that I have, so I'm going to stick with those, and we'll just see how they ultimately pan out. But yeah, Nvidia is the big story, as you can see right here. After market tomorrow, they will be reporting earnings, and who knows? Does it have a monster day, or is it one of those things that causes the market to crash? Time will tell. All right, let's see. What do we got here? You guys talking about Greece. Andy says, yeah, until Nvidia and Jensen speak. Look, I think the market is pricing it in. I think the market's already pricing in some positive news from Nvidia, so that makes it a little bit more difficult to anticipate. Because even if they come out with good news, the market may have already priced that in. I mean, just look at the chart over the last 3 sessions. I mean, that's a pretty nice, and especially if you go off this tail, this tail that dipped all the way down into here, when I actually purchased it, you're up 7.68% in 4 trading sessions. That's pretty darn good. Dakota says, I bet Nvidia is nothing. Flat, I don't think it'll be flat. I think it's going to have a pretty wild mix. But I think the change here is going to come off the news and information about China. How does China impact this new Nvidia sales funnel? All right, I saw a question in here. S&P, should we short above if we can't break the highs? I'm not going to be shorting the S&P. I think that's just too risky. You've got a market that just feels like it's got a bid underneath it. The tailwinds seem to be much better than the headwinds. Nvidia certainly will help define what that might look like going forward. But yeah, I'm not that confident and not confident enough to short this bad boy. I would just kind of step aside and let it do its thing and be more reactionary as opposed to anticipating. Walgreens Boots Alliance being kicked out of the S&P, about time. I thought that happened a while ago. I thought that maybe it's still in there. What else we got here? Looking to sell some SPY and buy BTC with the dollar soon. Well, I mean, when you look at those 2 charts there, you've got obviously S&P looking great. Here's the S&P. And then you have Bitcoin, which looks a little bit downtrodden. So yeah, I think that might actually be a decent idea there, Infinity, or infinitely finite. Rotating out of a performer into an underperformer when there's a great possibility that Bitcoin's going to run back to a performer status. The tough part is when you look at something like Nvidia, it's just been performing and performing and performing. Bitcoin has a bit more volatility to it, but all in all, I think that they're both things that you should be holding, not selling. What else we got here? Interactive Brokers replacing Walgreens Boots Alliance. Cool. Thank you for that one. And the Feds may be lowering 25 basis points. Well, Jimmy, we can get to that one. Let me go into this question here from Les. Les says, seeing Powell's comments at Jackson Hole, he did mention jobs, but I didn't see him saying rate cuts. He did say the balance of risks have started to change. He actually did mention rate cuts. He said our policy stance may change, and that means going lower, right? The pressure's on them lower. So that was implied that there would be a rate cut, but didn't say when. He says, I was wondering if it almost means that if inflation is sticky, which I think it is, and the PCE on Friday, another round of CPI and PPI data still to come, and the jobs market isn't weak, could there be a rate increase? What are your thoughts on that? Well, personally, I don't think that that's going to happen. I think that there's just too many factors pushing this market pushing the Fed to a cutting position. I think if anything, they're going to keep their rates where they're at. So let me share this with you. This was our, one second, I got too many damn windows open here. Here is I don't think the Fed's worried about jobs data, Margaret. I actually disagree with that one. I don't think the Fed's worried about jobs data at all. Yes, it's increasing, but when you look at where we're at 4.2 to 4.3%, there's no way. Absolutely no way. So look at the table I've got here for you. And for those who might be new to it, what I'm doing is just going over the past few months, tracking what different economic results are and what that might mean. Green mean cut rates, yellow mean stay the same, red mean raise rates. So we have seen a little bit of a shift here. The CPI number is totally fine. That would warrant cutting rates at 0.2%. We have this one outlier at 0.9% for the PPI numbers. That is the biggest concern. I don't think that will cause them to raise rates just because it's 1 point data. But if we got 3 or 4 months in a row of that, then yeah, that could actually be a piece that causes them to start to raise rates higher. Now, You notice that PCE number, I just put red there because it has started to move to the upside, right? We are starting to see PCE went from 0 to 0.1 to 0.2, 0.3. Now it's starting to get a little bit too high. We shall see if it continues to surge like this, or not really surge, but increase incrementally, then that may actually be an argument for the Fed to raise rates. Now, unemployment. We've seen upticks in some of these ones, but not much. It's super low at this point. 4.2 is the current number compared to, as I mentioned many times, with Ben Bernanke saying 5.5% is full employment. Jerome Powell talked at the Jackson Hole Symposium about how he felt that labor participation was certainly gone on the downtrend, and that had him concerned. But it was concerned, but not as much as inflation. I think that the effects of tariffs and the trade war stuff going on is a far more significant variable that is still unpredictable for the markets, which is why I think the prudent thing to do at this point would still be to hold rates at the September 17th meeting. I don't think that they should do anything. So to Les's question, could there be a surprise raise? I don't think so. I absolutely do not think that would happen. So again, we have another month worth of data, right? As you pointed out, we've got that core PCE price index, plus we also have two CPI and PPI numbers, and another employment number coming out on next week. So to both of these, I don't think there's enough to warrant a surprise hike. For them to hike at this point, you'd need something dramatic. Like, let's say that your next number to come out is going to be the core PCE price index number. Let's say on Friday, let me make sure 100% that that's Friday. I'm pretty sure it's this Friday, but I want to make sure. Don't want to give you the wrong dates here. But let's say that number does come out, and instead of 0.3 as you see on your screen there, let's say it jumps to 0.6. If that happens, then the discussion changes dramatically, right? So core PCE is on Friday. You can see that right here. That's going to come out at 8:30 a.m. Eastern time, so 1 hour before the market's open. If that were to happen and we get like a 0.6 or 0.7, then all of a sudden the discussion will change very rapidly. And I think, when that number, if it comes out like that, you're going to see the market sell off aggressively on Friday, because that does mean that the Fed will probably not cut rates, right? They'll probably keep it where it's at, but I don't think it would warrant raising rates. It's too short term for them to raise off of 1 point data. Jerome Powell, as much as I think the Fed needs to go away, I do respect the fact that he doesn't seem to be very knee-jerk reaction. It's wait to see how this all pans out. So, at this point, I think the probability of a rate increase is 0. Rate staying the same, for me personally, I'd probably put it about 15% because of that PPI number that came out a couple weeks ago. Right, I think I'm higher than the Fed funds futures, which we have not looked at today. So I'll bring that up for you guys so we can check out the Fed funds futures and see what the market is pricing in. Let me bring that up for you right now. Right now, they've got a 9.6% that rates are going to stay the same, 90% that we're going to see rates cut. I would increase that number for myself. I'd say there's probably an 85% chance that rates get cut. But again, if this data changes, all this is going to change very, 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 very quickly. So yeah, it's going to be a very interesting week, but I think the probability less of seeing a rate cut is absolutely 0. Would you explain the PCE price index? Well, it's just a measure of economic data. It's a measure of a basket of goods and services, which is different. It's similar to CPI numbers. There's slightly different calculations, but basically it's trying to do is give us an estimate of are prices increasing or decreasing around the United States for a variety of goods and services. So when we see those numbers surge up higher, remember these are monthly numbers. So you can see here we've got 0.3. Let's say we got 12 months in a row at 0.3, well, that'd be 3.6% inflation. If we got 12 months in a row of 0.9, we're looking at like 11% inflation. We definitely do not want that. So again, we'll have to wait for the next number to come out here for September. But all in all, I think that we're okay. I think the probability is going to start to shift a little bit more to them keeping rates the same if, in fact, we do get a little bit higher PPI numbers. And if that employment number next week comes out a little bit higher than expected, I think that causes them to pause. And that's pretty much it. Margaret, did I talk about the durable goods orders? I did not yet. So it was definitely better than expected. You can see here, I'll bring up the chart for you. They expected it to go from negative 0.94 to negative 3.8. Let me rephrase that. I messed up my number. Sorry. Negative 9.4 to negative -3.8. So increasing, but still a contraction in durable goods orders. It actually came out at -2.8. So it's actually much better than expected. We don't like the fact that it's down below zero. Obviously, that represents consumption, and we'd like to see that number above zero, showing more consumption. But at least it's an improvement off of the abysmal number we saw last month, which is the lowest number we've seen since early 2020 on durable goods orders. The other piece that I found interesting, and I mentioned this is not good for the markets, is the S&P Case-Shiller Composite 20 Home Price Index continues to slide. Why? Well, prices are dropping for houses, right? You're probably seeing more supply come onto the marketplace. This is not good. The more that this number goes down, the less equity people have in their homes. It's not growing at a rate that was achieved before. So it's not great to see this number come out at 2.1, lower than actually in line with expectations. But as Market says, people use their homes as a bank, right? And if this starts to drop and go negative, you notice what I always say: the trend is your friend till the bend at the end. Notice what's happened since early 2024. We're making lower lows and we're making lower highs. And if that continues to that trajectory, then we will be below zero. And below zero means that home prices are falling, meaning that your ATM, your home, is now not holding as much money in it. So yeah, this could be something of concern here, because when you have this moving up, more money's in the economy. More money can be borrowed against your home, and that's great for driving things higher. This is not good. Not good trend here. And you don't hear too many people talking about the Case-Shiller Composite 20 Home Price Index. Not good at all. Can't go lower than zero. Yes, it can. Absolutely. Let's take a peek what happened in 2006 and 7. You want to entertain ourselves there? Check that out. Unfortunately, it's falling off the chart, but we were at -20%. So yeah, when those home prices were falling and all those, those liar loans, or can you fog a mirror loan, those all disappeared and people they went belly up. Yeah, we can go below zero. Absolutely. Prices can contract. Yep. And it could happen very quickly. I mean, given the rate of descent here on the S&P Case-Shiller Composite 20 Home Price Index, realistically by the end of this year, you could see this thing below zero. I mean, just back in May, this thing was at 4.5. Now it's been cut in half in just a couple of months. So not good data at all. All right, next question I had. I get asked this question not all the time, and you guys all know my answer, but Marcel asked this one, so I'm like, okay, I'll answer it. What are your thoughts on dividend stocks? I like Pfizer for the 7% dividend, but the stock is underperforming. I don't like dividends. I don't care. I don't care for dividends. I want to trade a security. I don't want a dividend. I want to trade that for upside movement or downside movement or sideways movement with options. I don't care for dividends. It's not of interest to me. And, Marcel, I looked this up here before the show. So you have Pfizer on there, right? Well, PFE, and you're saying you like the 7% dividend, and that's great, right? Sure, let's have 7% dividend in my account. But I took a line right here, and I drew it from today's closing price and went back 12 months, because I think the trailing 12 months is almost 7%, just underneath that. Yeah, exactly, Big Eb. Is this you, Michael? You're now Marcel? No, for some reason, Michael said he couldn't email me. I think maybe, I don't know, maybe he's in a country that doesn't allow that. But, okay, you made your 7% dividend. Oh, thank you. Sorry, Lori. So here is the price chart of Pfizer that goes all the way back a year, okay? So I got the full year up there. And you're like, okay, great, I made 7% for the year off dividends. Really? Well, look at the rate of return. You're down 15.45% on the share price of Pfizer. This is not good. It's terrible. You're actually losing 7% in a bullish year when the markets have been just ripping and ripping and ripping and ripping. So this is why I don't like dividends, because you hang your hat on, I make 7%. It's a gimme. I got a slam dunk. I make 7%. Yeah, but the depreciation of the asset itself is what hurts. Now, to be fair, could you buy this? Could you have bought this lower and got your dividend as well as price appreciation? Yeah, and I think that's where market timing comes in. I think market timing is critical in all this stuff. So Marcel, I'm not a fan of dividends. They bother me. Can we make this the last time? Yeah, let's just. I could have picked any other dividend stock, but he specifically asked for Pfizer. So there we go. One other thing, this was a question that came in from, or not a question, but I need to do more research here. But Mike LaRusso, good to see you. Thank you for the work that you did on this. I mentioned yesterday that I'd like to do a comparison, and I haven't done it. But pick a date and time, and unfortunately Mike went back too far. But if you were to compare side by side BITO and IBIT, which are both ETFs for Bitcoin. IBIT is spot, meaning it actually owns Bitcoin and does not pay a dividend. BITO does not own any Bitcoin. It owns futures products, which have backwardation and contango effects to degrade the value, but it pays a really nice dividend. And so Mike went through and calculated if you bought BITO since inception, right, how would you have performed? And let me make sure I got it up here. So he did this right here. And I got to immediately point out flaws here, okay? Immediately point out flaws. So he says, okay, about 1,000 shares. My entry price was $5.10. And your starting point here is February 2nd, 2023. Or sorry, February 2nd, okay? Let's go look at the chart here of, this is for BITO, B-I-T-O, which is the futures one. And if you look back here, I don't know how you bought at $5. Its opening price from back in 2021, when it first started, was $39. And if you go from February 2nd, where you were talking about, and you said you bought it at $5, that's also mathematically impossible because the range for that day, the high was $24.13, the low was $23.26. So there is no way that your math is correct here if you tell me your entry price is $5.10. Now, that might be adjusted, maybe. Sure, yeah, we can do that. But what's nice about this and what he's calculated out here is just fantastic dividend returns, right? It's been making an incredible amount of money in dividends. And that looks so tasty, it looks so wonderful. But what you're not calculating in, if you go from February of 2022 to where we are today, let me lower this number here, February of 2022, there's the second where you purchased at. You haven't made anything. You've really been sitting underwater. So yes, you made your dividends, and you've lost on BITO itself about 17%. Okay? Yeah, at 2023, did I say 2023? Oh, thank you. Okay, well, okay, all right, yep, you're right, Mike. My starting point is when they started paying dividends, which is 2023, and that's that low point. Okay, all right, I'll give you that. Let me recalculate this because I want to look at it from not only the dividends collected, but the depreciation, but then also I want to calculate in what does IBIT look like, right? So if I add on IBIT on here, unfortunately, IBIT doesn't start till way later, right? But the rate of return, even if you just got IBIT when it first started, which is 2024, you're already looking at 185% gain. So again, the question I had was, let's pick a starting point where both of these are functioning, or if you just did Bitcoin, at what point do we see BITO underperform Bitcoin? Because yes, BITO is paying a dividend. However, it should be shut down. No, people like the dividends. It's great. But I think overall, if we lined it up apples to apples, you have a dividend-paying futures ETF and a spot ETF. If we looked at the performance over a specific time, the spot is going to significantly overperform and the futures product would underperform. The question is, does the dividends offset that? And does it bring it back up to relatively the same amount? And I'll have to do some research on that one. But thank you, Mike, for that one. Yeah, I got the wrong date in there. You guys remember, please, Merlin? I mean, not always be right. Wow. Well, at some point, I've been so dang busy, I just haven't had a chance to look at this stuff and build out these tables and do a lot of research for you guys. I'm not doing as much research because I'm just so busy doing other things and trying to get my life back on track. So, but thanks for catching my starting point error there. Yep. Lisa, let's talk about UNH. Yeah, UNH is not looking good. They got slapped with another federal thing today. It's not that bad, actually, considering I guess it's over pharmacy drug prices. And I don't know whether this is just a rekindling of a past lawsuit. Remember, they had two going on. I even kept track of them all. But they were down a little bit today, down 1.45%. They're down in the after hours by about another 88 cents. So not that big of a deal. I do have calls on this one as well. I have the 310 calls expiring this Friday. I'm pretty sure. Let me make sure. Let me look at my table here. Yes, I have the 310 calls expiring this Friday, which we'll see what happens there. But I'm not so concerned. Again, I feel like this is all stuff. I'm hanging my hat on Warren Buffett and his team, right? I mentioned this before, that Warren Buffett and his team are doing deep dives into companies they're buying. And this type of stuff should already have been known, right? There would already be some letters going back and forth to the CEO and the executives about this. I can't imagine that this was a blindside type of lawsuit. I recall the time that I was involved with I was working at a company that got involved in a big lawsuit, and there were warning signs way before the actual physical filing of the lawsuit. Like, they knew that this was coming months before. So like Steven just says there, I think this is all baked into the price. I think that this is something that was already known and calculated. This may have just been the official pushing and testing. But yeah, I'm not worried about it. And the long run, again, I am firmly in the camp that United Health Group is too big to fail. I'd like to look at let's go to Yahoo, and I'm going to put UNH here. I want to see what their cash on hand is. To me, this is something that you just pay a couple $100 million and you make it just go away. So let's go to statistics over here, and I'll show you the cash on hand. Right now, they have $32 billion in cash. $32 billion. So yeah, it would suck if they had to pay $1 billion in fines on this one. But if I'm United Health, I'm going to pay $1 billion. I will go. We're going to settle with both of these. I'll do $500 million for this one, $500 million for this one, and we'll just shell out $1 billion of our cash. We got $32 billion. It's a lot of money, but the dragging down on the stock and the constant press of this will continue to press that price even lower. So I honestly, I think it'd be way better interest in their part to go, yep, we're going to settle without admitting guilt. Here you go. And we won't, and they're internally going to fix these problems and make sure if they are guilty that this doesn't happen. But most of these people can settle out of court without admitting guilt. They just pay a big fine. $1 billion is double your net worth. Nice. You're worth $500 million, Margaret? Atta girl. Are you single? Just kidding. 500 million. That's a good one. But yeah, I think the cash is there. Make it go away. Just make this go away, and that way people aren't talking about it, and they start looking at the rebuilding, and then this starts to move up. That's what they should be doing. We'll wait and see how that goes. Big Ed says that's $1 billion is nothing when you've lost 250 billion in market cap. Yeah, right. It stem the bleeding. Just make it stop. Make it stop. Margaret, I don't have a preference. I think having a preference over hair color is a trivial, childish thing. It's the person's. It's what's underneath the hair that matters, right? It's the brain. It's the brain that matters. All right. Where was I at? I had one more question here, which is an easy one. Holden asked this, and I'm just going to touch on it briefly, and then we'll wrap up here. Holden says, which style of trading is best to make money? My friend is a day trader and says it's the best. My investor friends say theirs is better. Look, there is no better or worse. I think with each style, and you only have two styles on here, but if you could break it into three categories, you have short-term day traders, you've got intermediate swing traders, and I would argue you have longer-term position traders. If you have those three, each one has very specific risks and rewards to it. The problem with long-term investing, your investors, and this goes for all of your investor friends right now, including the people who are watching this one is the best, is that trend. Whether you want to look at on the daily time frame, looks amazing. You want to look on a weekly time frame, looks amazing. You want to look at on a monthly time frame, it looks amazing. So your investor friends, it's very easy for them to boast about their gains because they haven't had to do anything, right? They literally have not had to do anything. They just held their positions. You could have bought anything in this market pretty much, and you'd have been making money for the past 15 years. I mean, it's not like this is hard. And by the way, this is to 2013. I could go even further back to 2009. All right, this is a no-brainer investor type of environment. Now, when we look at day trader, obviously a day trader has significant challenges, and I would argue that people starting off as a day trader are most likely going to fail. The reason for that is the amount of churning that your account does. You're always whipsawed in and out of positions. You're making tons and tons of trades. And even though the commission costs are cheaper today, I think it's harder to be a day trader than it is to be a long-term position. You can sit back, let it fluctuate, as long as you buy into good companies, right? Yeah, and the question there from which one, it says the one that works for you. Right. We are all different. Kind of like the discussion going on in chat right now about hair preference. Some people in here are probably adamant that blondes are better. Some are brunettes. Somebody got black hair is better. We all have our preferences, and I think that goes to our psychological makeup. And for me, when I've been working with students over the years, a lot of them, especially when I was day trading in the late 90s, right? When I was a high-speed day trader in the late 90s, everybody wanted to do what I was doing because I was doing well at it. But I had a skill set. I think I was really, really, really good at short-term trading because I had very strict rules. And most people would lose money at that type of trading. It boiled down to my temperament. I used to be a very fast-paced person. Snap, snap, go, 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 go. I was always just work, making trades, and it was awesome. But as I got older, that style is just stressful. It doesn't work for me well anymore. I day trade futures every now and again, but it's not my main source. It's more like if I have time, I'll go trade some futures products, or if I see something in the equity markets, I'll trade it. My guess is in your comment, Holden, that your day trader friend is probably younger. I'll be honest, and this sounds really bad, I would be skeptical about the results that they say they're getting. Most day traders fail. Most day traders fail. And that has to do with you're constantly trying to make small amounts of money. You're trading a larger block of shares. So you might be trading 1, 2, 3, 5, 10,000 shares of a stock, but you're trying to make a nickel or a dime on that. The problem happens if things start to rail against you and all of a sudden you're down 30, 40, 50 cents on that block and you've erased weeks worth of gains. So day trading is very difficult. I'm with Lori. I'm a swinger. I like swing trading better. I feel it's just a much calmer approach. It fits my personality. I can make a trade and I can go golf. I'm playing pickleball now. I can go to the beach. I can do whatever I want. And I don't stress over that day trading type of thing. I also don't like to have giant drawdowns in my account. So I definitely don't like to have long-term investments. I'm not a real long-term investor other than cryptocurrency, which of course everybody here knows I am definitely a long-term person there. So Holden, there is no answer here. I like that your friends are both telling you that they're doing well, but the probability in this situation here is better that your long-term investor friends are performing better from a performance number, just given historical statistics on how day trader performance fluctuates and typically the failure rate of day traders. Now, that's not to say that your friend's not successful. Maybe he's doing really, really well. And if it is, I would encourage you to learn from both of them. Learn from your friend who's a day trader. Learn from your investor friends. Maybe research swing trading a little bit, but find out what fits your personality best. If you're someone who's a little slower, right? Let's say you're in your late 60s and you're just kind of a little slower on your heels. You're crazy for thinking you can day trade. You have to be so quick and sharp, snap your fingers responses, man. You got to be so fast. An investor, I got my time, So find something that fits your personality type. And bottom line, as was said here earlier, you got to find what works for you. You can try different styles, but it's always about analysis and measuring performance. When you look at like Formula One race cars, you may get a sponsor that comes up to them and says, "Hey, you gotta use Pirelli wheels." Really? Well, I'll tell you. Sorry, Big Eb. It was a generalization. So maybe 70s. In that Formula One race car example, if someone says you got to use Pirellis, if I'm the pit crew, I'm like, oh, that's great, but I'm not going to listen to you. What am I going to do? I'm taking Pirellis and Dunlops and Goodyears and all of the makes of tires, and I'm testing out the performance of that car on all those different tires. And whichever one gives me the best performance, that's what I'm using, period. And I think trading should be no different, right? You should find out what works for you. And I don't care whether I say something or somebody else says something. You have to find out what works for you. Anonimo 3200, huh? Let me scroll back up here. Where was Anonimo? Anonimo. Dun, 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 dun. Where's Anonimo? Where's old Anonimo? I don't see Anonimo on here. Oh, there it is. It has backwardation and contango. If you look at my YouTube channel, I'm not going to explain it. John Rowland did a show called With Backwardation. I will post a link to you. It has to do with contract rollover. So when you go from, let's say, the September S&P contract and you roll into the December contract, sometimes that contract is going to be priced higher, sometimes it's going to be priced lower. And that will cause what's called backwardation and contango, which can devalue the underlying position. So I'm trying to bring up my YouTube channel here real quick so we can do this and show you. I'm pretty sure I've got it as a show where we did specifically on backwardation. No, nothing. No, I spelled it wrong. W-A-R-D. Okay, so where was that one? A long time ago. John Rowland did a really good job with this. Where was that one? I'll have to go find it for you, but it's a really in-depth explanation. John did a really good job of it, but it really boils down to the contracts themselves, right? How does that contract roll? Yeah, it's only on futures. Yep. It's a futures unique product. And basically what you're looking for is when I roll from September, how far of a discount is when I roll from September to December, how far of a discount is that futures contract? And John Rowland did a really good job with that, but I can't find out where that one was. I could have sworn it was called backwardation and contango. Then I am gonna floor trading, extending, Man, he's done a bunch. There we go. Contango and backwardation. Give me 1 second. You're gonna hear some audio here. I'm just going to copy this and put it in the chat for you. So this is a great show that in-depth explains backwardation and contango. So hopefully that will help you there. Okay? No problem, Anonymous. Thanks for the question. And Margaret, thanks for bringing that one up. She's already got it. Margaret, you're great. She's got it. She's like, I should give you moderator privileges. You knew it. You knew it all. Hopefully you guys can see that link, right? I think you can. All right, so Holden, that was my answer to you. There is no real best trading style out there. It really what fits your personality. I would argue you need to explore and try different things. Try with smaller amounts of money. Don't trade with big blocks of capital. Start small and find out what works best for you. It will take time. It will take a time. I live my life a quarter of a mile, day trader's life. Absolutely, it's pretty good though. Cool. So let's go to your economic calendar and earnings calendar for tomorrow. Obviously, the big stuff is this. Nvidia is the big dog, but you notice there are some other ones. Nothing huge. You got Royal Bank of Canada, but BYD will be interesting. So BYD is that darling stock out of China that's not releasing cars in the United States, unfortunately, because some of their technology is amazing. You have CrowdStrike reporting earnings tomorrow. Those are both after-market close. You have Snowflake, so a couple big tech firms. Let's look at Snow and CrowdStrike real quick. CRWD. This is a monthly, so the last couple months have been pretty bad for CrowdStrike. A pretty consistent trend lower here, maybe pricing in expectations. And you do have an unfilled gap that goes all the way back to 367. That's about a $50 decline from current levels. And what was the other one? We had CrowdStrike and we had, I just had it up there. My memory is killing me. Oh, Snowflake. Snow. Let's look at Snow. Snow is the one that I was telling you. It's going to be below $100. It got close. I don't think it ever actually made it below 100. Let me take volume off of here. Did it make it below 100? I think maybe I might have been vindicated one day, like real briefly. No, maybe 110. Snowflake actually looking pretty decent, right? You got a nice uptrend here, higher highs, higher lows. There is an unfilled gap as well that goes back to about 181 on this one. So we'll see how that performs tomorrow. Now on the economic calendar front, obviously we talked about the numbers today with durable goods and S&P Case-Shiller Composite 20. Tomorrow, all you have is crude oil inventory, so no big deal there. Although, the way that oil moved today leads me to believe there's going to be some problems with the crude oil inventories, which is always off, by the way. You guys know the numbers are always off. Okay, Dunsky, that's it. What time we got? Oh, man. I didn't even have the hourglass running today. No hourglass today, but it was looking pretty good. So you guys were talking about the BYD motors. What I've heard about them, I've never driven one. I've heard the technology in them is just off the charts. And it's stuff like it's miles ahead of Tesla. And I really want to see one and drive one as far as comfort and luxury. But I think what really accelerates them, well, it does say that there's a BYD in Los Angeles. There's your Han, which kind of looks like a Tesla. It looks like a Tesla and a Lucid Cross. But here, that's the only one they have in the U.S. Okay, let's go in the world and see what they've got. They got way better models. But some of the luxury accoutrements are just incredible. But it's the price. The price is super, super inexpensive compared to a Tesla or anything else. Okay, stop. I guess I have to walk. Oh, wow. And this is going to take... This is the one. The Yuan is the one that I saw. The Yuan is the one that I saw, and it looked really... I did not, Tim. Go ahead and type it in again real quick. you know, it doesn't look like anything special, but it's the interior. It's the luxury features on these things inside are just pretty incredible. But yeah, we'll see. I wouldn't mind them coming to America, but we'd probably have like 100% tariffs on those ones. And the reason we have the tariffs, of course, is competition for existing car companies. And there we go. So the numbers I was seeing was like $30,000 for these really kind of luxury sedans that have all kinds of, just like I say, really just amazing features and functionality. Unfortunately, it doesn't really do a good job of giving me a tour here. And Elon would lose it. Yeah, Elon would definitely have some issues with this. Of course, you know, once you burn that bridge with President Trump, as I think he did, what's Trump going to care, right? But I think Trump definitely wants to preserve American businesses, so he would certainly, I think he would do some things to make sure that these didn't make it to America. Yeah, 30K after all the... 30K I think is what they're going for in like Mexico or something, but you know, once they come to the U.S., I'm sure there'll be a tariff. So Tim says, can you do a show about your trading strategy, going step by step through a trade? I've done it in the past. I've done it several times, but I have multiple strategies, Tim. I do a lot of different things. So the strategy that I do here on this show, the trades that I share with the audience here, it's a hybrid of the wheel strategy. So if you go back to my show, also, I think I called it the 1% strategy on this show. Let me see here real quick. I'll bring it up for you guys. Let's go 1%. Yeah, there it is. So I will. This is 4 years ago. Man, I look just as old then. So here's a show linked to you which talks about the 1% strategy. So I have multiple accounts that I'm trading at all times. That video there that I just put in the link there, Tim, that is about. It's a 1% strategy on a very low risk environment, taking ETFs like, you know, XLE, XLF, SPY, and using those to generate 1% rate of return per month, or at least targeting 1% rate of return per month. We don't always get it. And that's not what I share with the audience here. That's other accounts I trade, and I always have positions going on there. What I'm sharing with the audience here on this program is similar, but done with individual equities, and it's much higher risk. And these are my current positions. You know, obviously some of these are underwater and looking pretty painful right now. But those are the current holdings for my TraderMerlin account that I'm, you know, tracking performance for the year with you guys on this one, and then I also do the kind of options on that as well. Right now I have 2 uncovered positions. I wanted to sell some calls today, but I didn't feel right on Palantir and on CoreWeave, but I haven't done that yet. So. Or actually, no, I'm sorry. I have Nvidia, Palantir, and United Health, so I need MicroStrategy, and I need the Palantir covers. So there we go. Needs to get back above 425 stat. Look, Bitcoin's going to have a rally. Don't worry. It'll be okay. Bitcoin will do fine here and bring us back up into good territory. All right. So there you go, Tim. I hope that helped. Hope you got that link. I hope it did the link show up in the chat, by the way, guys? I don't know if my links show up. I know, right, Rita? 4 years old. I'm looking at my video here. Hold on. Let me see if I can. I don't know. I think I need a haircut. What do you think, guys? It's tough. My hair looks terrible. You guys get to be my consultants here. So I'm going on a singles dating thing. It's not a singles dating thing. It's Andy. I've lost about 17 pounds. So yeah, I'm. Thank you, Rita. I've lost a bit of weight. My face is definitely much smaller. I'm working out a lot more. My biceps are definitely getting bigger. So from the hair perspective, I'm going on this singles thing. It's basically a winery thing in Laguna, and it's all singles, 35 and over singles. And I'm wondering, I'll gel it up a little bit. Should I go get it cut? Is it too long above the ears? Come on, ladies. If I slick this up, I'm subconscious or self-conscious about my hair because my bangs, they cut it so damn short. See, Big Ed says I need a trim. What else, ladies? Do I need a trim? At least, especially if you saw my workout routines and how much I've been working out, I should do a before and after photo for you guys. I'm gonna be looking much better here in the near future. I'm feeling very confident about myself. But do I need my hair? Do I need a haircut? What do you think? Should I go get it trimmed? Shave it, Luis? I had a discussion with Judy. Says yes, I need a cut. Okay. You need to move out of Cali. Yeah, it feels a little bit fluffy over here. The problem is I went to the, the hairstylist, and I literally put my hand on this part of my head and I said, do not cut this. I like to spike the front of my hair up, and she buzzed the whole freaking thing. All of a sudden, my bangs were literally 1/8 of an inch long. And they're starting to grow back now, but it's like, this is terrible. All right, a little trim. I'll use gel. Yep, I'll keep this long. I'll have her, all right, that's it. Grow your beard again. Some people love the beard thing. Step by step, Jamie, step by step. I'm going to go with the hair. Yeah, it's hot, so all right, well, I'll let you know how it goes. That's going to be on Thursday. So Friday's show, I hope to have a really big smile on my face as I'm like, I finally met someone. Long way to go, though. Long way to go. All right, enough about my dating and personal life. Thank you guys so much for the show today. I hope you enjoyed it. Do a survey. I'll vote on that one. Okay. You guys are hilarious. The beard was a hit, I will say. The beard was a hit. Wear a loud flowery shirt. Tofi, you know that's all I wear anyway. Absolutely, Lisa. I'm always myself. I'm not trying to be anybody I'm not. Anyway, thank you guys so much for the moral support there. I appreciate it. If you guys have questions or things you want me to cover, email me. You know it. TraderMerlin@gmail.com. Again, those who sent in questions today, thank you. Holden and Marcel, Les, thank you guys for the questions. Tomorrow is going to be the big day. That's the calm before the storm, so we'll see what happens out there for tomorrow. So thanks, everybody. I will see you tomorrow for the Nvidia earnings. Take care.